Welcome back, Eric Roberts, Music City Trader. We're looking at the double crossover, and this is a more advanced analysis of a chart where I lost a bid, but I saw where I would have won the bid, and I'm going to show you this because these are the kind of entry points that I think make you a better trader. So you already kind of know the double crossover method from learning through the course through here, but here's where I put my bid. My bid was right here. It's kind of hard to see on this sheet, but it's right there. You can see where it was right here, and it was an up bid. And it really was a bad entry because if you look at this, you can kind of see there was really no cross in the stochastic. The stochastic kind of crossed up, and I even wrote that it kind of crossed up, and the MACD didn't cross. The MACD was just headed up. Somewhere in my head during these sessions, I started thinking, well, if the MACD is headed up, then it's okay even if it doesn't cross up. Why I think that doesn't work is because there is no momentum. It's just heading up. It doesn't mean anything. It could be going down and then up and down and up, but the MACD can be headed up for a long time, as it was here. It was headed up from all the way up here, headed up, and it was just flat across because you have a downtrend, you're underneath the long average, you got this going up, and this is basically consolidation happening, and because there's warring indicators in a massive way. So what I thought was, well, it's going up and this is kind of going up, and I took a bid here when, let's see, why would I have done that? I think maybe because I thought this would be a cross. I don't know. I still think I just wasn't thinking at this point. Or maybe I was just trying to push a trend. I think this looks more like, oh, it's crossing through, it's trending up. Let's push this trend up. It did not work. But I did look at this and realized that this would have been a pretty big win. And you got MACD still heading up. You've got stochastic crossed up from oversold right here. And any of these entries for those 3 minutes or 4 minutes would have been a win as it's crossing up. So you've got to see that this would have been the win right here. It crossed up, even though this didn't cross. So my theory was kind of working. It crossed the stochastic up. The MACD was already heading up. It didn't cross, but it didn't not cross. It kind of cricked down and went up. So that almost seems like a cross to me. It's if I'm just trying to see a cross. In live bidding though, when this is happening, it's really hard to know if this is a cross or not because it's not crossed yet, and it might have crossed down. It looked like it was going to cross down, doesn't it? If it would have continued on its line there, it would have crossed down. This would have crossed up. Would have been a bad entry, but this would have been a better entry. This is what I'm going to show you one more poor entry on this chart, which is right here. You have the stochastic crossing clearly out of overbought. Boom, it's tanking down, okay? And so you might think if you were just basing this on the long average going down and the stochastic going down, that, man, you could win this trade. And this is how it happens every time you lose. You would lose this trade because the MACD is clearly going up. So at this moment, you have what we call consolidation happening in the candles, kind of. They're not moving very much at all. And you have what I call, this is warring indicators, or the swirl. They're swirling because this is like going down, this is going up, like hot air, cold air. Get a little tornado right here, and that's what you get just straight away. Everything's converged together. This is going down, this is going up, and you really don't want to bid like this. The only way I would have taken this bid is if this would have cricked and chased down, and this would have been an entry point then that I could have taken. Still though, the MACD was not quite overbought enough. It wasn't up here. It was way down here, just moving up so slightly. So these are just some entries and not entries that you would take on a chart. I took a very bad entry point here, and I think what I was thinking is, this is going up, this is going up, this is crossing through. I'm going to do a trend push. This is what trend pushing looks like, and I do lose a lot on trend pushing. And really, my trend pushing has not worked as much lately. I don't do trend pushing. I like trend pushing. In other words, finding it going up and go, yeah, it's going up, so I'm going to take it up. The only problem is trend pushing does this exact thing right here to me a lot, and especially lately. So what happened was here, I saw this chart was going up, and I was like, oh, look, it's going up, and then it goes down, then it goes up, it goes down a couple, goes up. It went down a little bit, and I took an up bid, thinking that I'm well above, I'm spread apart, which is what I use in trend pushing. I'm up above here, I'm spread up here. All my indicators right here told me this is going up. I took a 3-minute bid because I wanted to just give it some chance to keep rising, and then it flips down. This happens to me all the time lately. As I'm working in double cross, I still try to flex the little muscle of the trend push, which I really like trend pushing. And I've won a lot of candles, a lot of bids doing 1 minute trend pushing where I find these crossover points going up and I could win. You look at this and think, if you were doing up bids here, you could have won 15 bids on the way up of that chart. So I've spent a lot of time trend pushing and won a lot. But what I've found is it sort of starts to fail me. And when I'm doing a method where I'm only going 4 deep, it's extremely dangerous because you can't really push a trend with only 4 deep. You just can't do it. You can only you psych yourself out. You can only go 4 deep. And really, when I'm trend pushing, I want at least 8 deep. In other words, I want to be able to guess 8 times. So if this turns around a little bit, I want to be able to okay, go back down with it, go back up with it, go back, do it. But that's different than the double crossover method that I'm teaching you in this course, which is what I think is the most clear method that you can get good at. Trend pushing is fun, but unless you can go really deep, unless you're really, really kind of honed in with the charts. In other words, when I say honed in with the charts, unless you have spent hundreds of hours bidding and just looking at charts for hundreds or thousands of hours, months and months and months, you start to get a sense for what a trend push would do. As you see a trend setting up, you can kind of go with it. But the biggest problem I have with trend pushing right now in my own personal bidding strategy is I can hardly tell when it's going to turn around. And that's when you start to lose. So no matter how many you went on the way up, if you're not deep enough on the way down to realize, oh, it's stopping, you could be 3, 4, 5 deep before you realize, oh, I'm kind of, and then you're consolidating and then, you're just not sure where it's going next. And now you got to start over, but you're already 5 deep. So be careful out there bidding. And if you're going to use the double crossover, you can use the double crossover and the fakie double crossover. Both of those seem to work very well.